Good morning, traders, and welcome to BCI's morning market outlook. Today, we're watching a steadier US dollar as hopes for global trade deals grow. WTI crude trying to recover from a 3-week low. Gold in a correction phase after recent highs, and the Australian dollar holding firm above key technical support. So, let's break down the key drivers across these markets. First up, let's have a look at the US dollar index, which climbed to around 100.2 on Thursday, making its third straight day of gains. This comes despite a surprise economic contraction of zero point 0.3 in Q1, the first in 3 years, which was driven by weaker consumer spending and higher imports. Optimism around trade talks, particularly comments from President Trump about deals with China, India, Japan, and South Korea, helped boost sentiment. Technically, the DXY is ranging between 99 and 100.33 with RSI near 44.8 and MACD turning from neutral to bullish. However, bearish momentum persists with all major moving averages pointing to further downside. Key resistance is at 100.33 and 101, while support lies around 99.94 and 100, which is a psychological level. If that breaks, we could head down to 99.5. Next, let's talk a bit about WTI, crude oil, which is trading near the $58 mark on Thursday, bouncing slightly after hitting a 3-week low. Prices were pressured by expectations of a higher OPEC supply, comments from Saudi Arabia suggesting tolerance for lower oil prices, and weak economic data from both the US and China. But positive inventory data and strong US equity markets offered some support. From a technical perspective, WTI remains weak with RSI down at 33.5 and bearish momentum dominating. Price action is holding above the support level of 57.66. A break lower exposes 54.78. On the upside, watch for a potential rebound. If the $60 mark is breached, that could push prices towards 61.35 or even 62.07, which is the 9-day moving average. Next up, let's have a look at the gold chart. Gold pulled back to 32.02 on Thursday before rebounding above 32.38, marking its third consecutive session of losses. This move is driven by easing US-China trade tensions, including news that Washington may ease tariffs and that communication with China has resumed. Gold still remains up over 5% in the last month, supported by safe haven demand and growing concerns over the US economy. Technically, gold is hovering around the key $3,200 mark. A break down could target 31.57, which is the 34-day moving average, and then 3100. If the upcoming US jobs data disappoints, rate cut expectations could push gold back up above the 3260, 3300 mark. A breakout above that zone would open the door to 3327 and possibly 3353. Lastly, let's talk about the Australian dollar, which is trading near the 64-cent mark after a brief spike on stronger than expected trade data. March trade surplus hit the 6.9 billion Australian dollar mark, which is far above forecast. Rising exports and falling imports, along with waning RBA easing expectations, are supporting the pair. Trump's optimistic remarks on trade deals with China and others have lifted sentiment as well. On the chart, the Australian dollar maintains a bullish tone with RSI above 54.75 and price sitting around the 9-day SMA at 63.80. Key resistance lies at the 64.49 mark, the recent 4-month high, and then 64.60, followed by 61.15. Support is seen at 63.56 and then 63.02, followed by the 63-cent psychological level. Momentum favors a continued upside move, especially if the US dollar weakens. Well, that wraps up today's morning market outlook. Keep an eye on gold's battle at the 3,200 level. Oil's struggle to recover amid OPEC concerns and the US dollar's reaction to Friday's job data. Meanwhile, the Australian dollar could continue climbing on positive domestic fundamentals and improving global sentiment. Trade wisely, stay informed, and we'll catch you in the next update.